Right, welcome to this evening's meeting of Audit and Governance, and we can start. Item 1 is apologies. John?
So we have received apologies for absence from Councillors Parry and Isaac.
Thank you very much. To confirm the minutes of a meeting held on the 13th of October. Happy with those? Agreed. Okay, thank you. Declarations of interest is item 3. Anybody? Sorry? Oh, sorry.
Thank you, Chair. Can I just pick up a matter from the minutes of the previous meeting? And that's the matter that Simon Roach raised with regards to the debugger access and getting a response to that question I was unable to reply to last time. So I'm pleased to be able to provide a response. So as part of the 2024 audit, Grant Thornton raised a risk regarding a vulnerability associated with people permanently having debugger access to the SAP system, which allowed users to change or delete entries and to change underlying code and bypass normal authority checks when executing transactions. This was the first time that this issue had been reported as a risk as part of an audit. In response to the 2024 audit findings, the debugger role was removed from the IT technical support team and can now only be granted temporarily on request for a specific purpose, after which it is removed. The role was also removed from the payroll role. However, this impacted on our payroll control center functionality, which is required to run payrolls, so we had to reinstate it as there was an operational need for payroll to be run. We explored whether the role could be granted to payroll colleagues on request in the same way as the technical support team. However, it was deemed that there would be a large number of requests and there would be an almost constant need for the role. Payroll Control Center provides a lot of value with running payroll, not least the speed in which we are now able to run it, meaning we can run a payroll during the day rather than overnight as we used to have to. However, it is not widely used by other organisations, which has meant that we are limited in being able to speak to other councils about their setup. As of the 16th of October 2025, we have now implemented a solution which removes the debugger role from the payroll role. This looks to be working as expected with no adverse effects. This has been a very challenging problem to overcome. The expertise, knowledge and skills required of our IT technical support team to arrive at a solution should not be understated, and it should be acknowledged that we have managed to overcome the issue with limited access to technical support or guidance from outside of the council. But just to confirm, the debugger role has now been removed from all roles within the council.
Thank you very much. Does anybody wish to have a question? No? Okay, we'll move on. So, thank you very much. Declarations of interest? No. And then no. Item 4 is public participation, and there is a question this time from Torsten Mills, but I believe he's not available. Is that correct, John? Well, I'm sure you've all read the question. It's not my intention to read it out, but I will read out my response. So, addressed to Torsten Mills, thank you for raising these concerns. I want to start by acknowledging the seriousness of the issues which are highlighted by Grant Thornton. Governance is not just a procedural matter. It is the foundation of public trust, and when it falls short, we must act decisively. First, on the timeline, you're absolutely right that progress has been slower than anyone would have liked. And when these issues began to emerge, the Council's monitoring officer commissioned an independent investigation by South West Audit Partnership. The investigation took time, and this was necessary, but the response to the investigation and the updates provided to this committee has created a perception of insufficient urgency. The papers tonight, though, show that there has been progress, with the overwhelming majority of the actions being marked as complete. Before moving away from the timeline, it must also be noted that the external auditors set out the position as it was at a point in time. This means that the report tonight from Grant Thornton appears to set out these issues as outstanding items, but the written report later on this agenda shows the progress that has been made since the SWOT report was presented. Audit and Governance Forward Plan will follow the progress being made with the SWOT investigation actions and wider organisation learning will come back to the committee regularly during 2026. On accountability and leadership, the committee must set the tone for improvement, which is why tonight we have a written update on the situation, regular follow-up on audit action plans, and ensuring that these, when risks are identified, they are addressed promptly and transparently. Where addressing the risk is delayed, we will also seek clarification as to how any risk is being mitigated in the interim. What will happen now is I will introduce a standing item for audit actions and risk mitigation, with directors required to report progress at every meeting. This will include written reports so that members and the public can see what has been done and what remains outstanding. Thank you. Move to item 5 then, which is minutes of the Audit and Governance Subcommittee. There have been none. 6 is the period 6 Financial Management Report 25-26, and this will be presented by Sean Kramer. Sean.
Hi, good evening. So I'm Sean Creamer, the Corporate Director for Financing, Commercial and Acting Section 151 Officer. So tonight you've got in front of you the Period 6 finance paper, which is the forecasts prepared as at the end of September. This paper follows going through Cabinet a couple of weeks ago on the 11th of November, and then obviously comes through to Audit and Governance as usual. So just a few highlights to pick out, in particular from the executive summary before handing over for further comments and questions. So forecast outturn is £5.3 million overspend on the revenue budget. This is an improvement we've seen since the Period 4 report, which is the last one, so an improving position as we move through the year. Within capital, we're seeing a programme of 142.9 million profiled for delivery, but slightly slower than anticipated spend at this point in the year. So we're doing some work reprofiling that and looking to understand what's going on with some of those major projects, and we'll bring that back as part of the next report. Going back to the revenue side, we're seeing pressures predominantly through those people-based services still coming through, again, recognising that increasing complexity of need, and these aren't services which you can just switch off because they are oversubscribed. These are kind of statutory duties and some of our most vulnerable people, so we continue to support them, and as a result we see some overspends through the kind of children's and adults and housing directorates. And looking ahead, one of the key risks remains is around the DSG position. So since we last came to this meeting, the promised SEND reform has been delayed. So that's now due to be coming out in what's described as early 2026. So we're not sure exactly when that will be, but that will be a key risk for the council until there's a clear way forwards. And that is picked up as part of the Grant Thornton papers, which are later on the agenda, in particular from a value for money position, recognising that the national position Dorset and many councils find ourselves in. And that's probably as much as I was going to say in terms of a high-level introduction, but happy to hand over for further comments or questions from committee members.
Thank you. First question, I believe, is Simon, and then I'll come to you.
Thank you very much, Mr. Chairman. A quick question about the collectible, the collectible debt, if I may. So on page 44, in paragraph 4.20.3, it talks about a table once you've taken account of deferred payment arrangements and gross without prejudice. And I understand there's some restrictions around the collectability of that debt, so you've taken those out. And then what you're left with is about £12 million that's more than a year old, if I'm understanding that table correctly. And then later on, in section 4.20.6, there's another table that shows that about debt that's collected in the current year and prior years. And my observation there is the collection of debt in the prior years drops off a cliff after a year. I mean, it's very small in terms of collectability. And maybe I've misunderstood this, and I'm asking for clarification, please. So we then talk about this year we've written off £24,000, but if it's so difficult to collect debt from prior years, why is it only £24,000 that we're writing off and not much larger numbers? Thank you.
Yes, thank you for the question. So as you'd expect, the finance team working with service colleagues are regularly reviewing the probability of collection. So the debt that remains for prior years is debt that we do expect to collect. As you say, it does significantly slow down, and the tables demonstrate that kind of slowdown. But we do expect that we will collect that in the fullness of time. Often the historic debt are on payment plans, or kind of special arrangements have been made with the person that owes the money, or the person or organisation that owes the money to the council. So we do continue to leave it on our books and pursue it until such a time as it comes through to me for a recommended write-off. Typically, the scenarios in which we're writing the debt off is where a person or kind of gone into like liquidation, or there's kind of no proceeds left to pursue. So we do try and keep it on our books for as long as possible, whilst balancing the probability of collectability. Because ultimately, if it's written off, that's more pressure on local taxpayers to fund that write-off. So we're keeping it on our books for as long as possible, and we'll actively pursue it until such a point as there's no prospect of recovery, or such a significant low prospect of recovery, it warrants being written off in full or in part. We do also, just to say, with the year-end Grant Thornton papers in the room or later on the agenda, we do also make provisions. So as the debt ages, we do also make a provision recognising we think maybe we're going to get half of that back, for example. So we do start to kind of make provisions for write-offs when they come, again, looking at that age profile of debt.
Thank you, Chairman. Yeah, Councillor Ryan Holloway of Wareham Ward. My question is more sort of probably directed to the portfolio holder for finance. 1.1 in page 16 of the report, where it says about the transformation and savings. Now, I believe that obviously that forecast has been revised. That has obviously to deliver 6.7 million of the 10 million savings target. And I just wanted to get some clarity from the portfolio holder to say, you know, are we still confident that we'll be able to deliver those savings in the time frame, considering all the other budgetary pressures that we're all currently facing? So thank you.
Of course he is, but Simon.
Councillor Simon Clifford, Cabinet Member for Finance. So yes, transformation and savings is challenging and has been for a number of years and will continue to be. As you quite rightly say, the target has been reprofiled, and we are forecasting to deliver £6.7 million in year. That is relatively solid. In fact, much of it is already banked. So the 6.7 is pretty secure. We will, of course, continue the programme in order to turn up as much savings as we can. But as we say in the report, the remainder of the transformation savings are reprofiled across future years. I'm happy to go into more detail, but if that answers your initial question, and we also have the Cabinet Member for Transformation sitting right in front of me, so if there's anything wrong or you want to add, please do chip in.
I thank the portfolio holder for just giving me some clarity on that, because he knows, he shares my view that it's extremely important is that we've got to meet those savings, you know, considering all the other budgetary pressures that we're all facing. So, but happy to maybe discuss more in further outside of the chamber. But thank you.
Thank you. Belinda.
Thank you, Chairman. Belinda Borden, Lyme Regis and Charmouth. On page 30, item 4610, not 4610, 4610, I'm just wondering if that could be explained a little bit. I didn't fully understand it. And also 4611, the Dorset Travel slight underspend. Has that been reallocated elsewhere in the directorate, or is that something that can be kept for Dorset Travel moving to the next year?
So just to clarify, so it's 4.6.10, which was around network operations. Yeah. There are colleagues from place in the room, but I'll start an answer and then maybe they can come in if I'm off track. But so I believe it's to do with reduced income in relation to the sign shop. As that reference to adverse trading position is recognising that they've not been able to achieve the income that was budgeted for within the year. And then the section around Dorset Travel. So obviously within services, we don't have any ring fencing for that particular service. The council's forecasted a £5.3 million overspend overall. So wherever there's underspends, they're going to be needed to protect the council's reserves overall.
Thank you. I didn't know what WSP meant, or is that a company name? Contractor. Sorry.
John, do you know what WSP means? Don't use them if you don't know what they mean. Yeah.
Yeah, Chair, I'm sorry. I'm not sure I understand the question, but WSP are a contractor engaged by the council to provide a range of professional services in engineering, highways, civil engineering and related areas. It's a very big contract. It's a term contract that runs for many years. It's coming up for renewal next year, but they effectively create the opportunity for us to expand and decrease our professional services capacity and not have to employ everybody who does that sort of work, because we don't need to employ permanently staff qualified in those areas, but we do need them occasionally. So WSP provide us with a capacity to contract and expand our expertise as we need it. I hope that answered the question. It did.
Well, I believe so, doesn't it?
Yes, thank you. That was my question. I assumed it must be a contractor name, but I wasn't sure whether it was a technical term that I didn't understand.
Spencer, I believe you've got a question.
Saying earlier about an improving trend, is that before or after the one-off use of contingency release, please?
So the improvement is partly due to the contingencies being released, and obviously the improving forecast on our future council savings, which also relies on some release of some of the contingency which was put aside for inflation and managing third-party spend.
I believe Councillor Kippax, did you have a question?
Thank you, yes, Chair. Chris Kippax, Minster Ward. Page 27, 4.4.13. Family placements in B&Bs have increased slightly since period 4, from 7 to 15. I'm struggling to understand how that's a slight increase when it's more than double. But maybe I'm just being simple about this, but could it be explained, please?
Well, I'm afraid I can't, but does anybody else can? Well, clearly it's almost, it's a doubling, and so it's hardly slight. So terminology is poor. Anybody else wish to contribute?
So just whilst my colleague colleague from the corporate director who looks after housing may want to come in. So I think the reference to slight was recognising that the number 7 and the number 15 are, in the grand scheme of the council budgets and the papers being described, are slight, but I recognise, as you say, it's doubled. And also for any of the families experiencing that situation, clearly it's not a slight increase, it's a substantial life event, which is unacceptable, and obviously the council's working very hard to address that. I wonder if I might invite my colleague Andrew Billany in to just describe some of the underlying drivers that we've seen that have kind of resulted in that increase.
Well, I think you've bought him enough time to look it up, Andrew.
I do apologise. I was distracted on something else. I apologise. Yes, I've seen that placements have risen. I'm not more than zero is too many, but that's still a relatively manageable number in comparison with other local authorities. So that I can give the committee assurance that that's been focused on very heavily. It's probably our biggest, our most pressing key performance indicator is to keep families outside of bed and breakfast. There are some initiatives coming forward in the council, the cabinet timetable to move forward with initiatives to get more settled leased accommodation in the first instance. You might recall April's cabinet earlier in the year outlined some of those. So there are initiatives in place to get us fully out of bed and breakfast. Can I just say one more thing? Sorry, Chair. There is often a rise in demand, and we're finding it also this time of year. The autumn winter period there is generally a peak in demand.
Can I come back to you, Councillor Kippax?
Thank you. Yes, it was the underlying explanation I was looking for. I'm pleased to know that it's got high priority, and appreciate 7 and 15 are both low numbers, but as was said, these are crucial life circumstances for the people so affected. Although the point about the word slight was simply because it wasn't accurate. Thank you.
Thank you for the question. Anybody else have any questions? Ryan, I'll come back to you.
Thank you, Chairman. Yeah, just got one more question. Page 37, 4.13.6, where it states on there about a £50,000 saving was originally anticipated within transformation of customer and cultural, but based on a proposed restructure, it says that this restructure is no longer considered viable and the saving will not be realised. I'm just wondering if possible, could I just get a little bit more clarity as to why that proposed restructure was not sort of viable, and obviously why how come it's not moving forward? Thank you.
Thank you for the question. Can I hand back to you, Lisa Cotton? Thank you.
Thank you, Chair. Corporate Director Lisa Cotton, Corporate Director for Transformation, Customer and Cultural Services. The original saving was put forward within the budget process as a potential way to bring a restructure together. And as you say, as that was investigated across a couple of directorates, the timing was not right, and there wasn't the ability for us to be able to carry that out. So we were unable to deliver that restructure, but there was a consideration that was put forward, a proposal that was not viable when we got to business case.
Happy, unhappy, whatever?
No, just to say, Chair, no, thank you. Obviously, thank you for the officer for giving the answer to that. Obviously, yes, it was a small saving, but it's just, okay, I understand that, sometimes when you do these things, they're not viable, but obviously it's, we obviously sometimes when you're looking for these savings, sometimes you can't always, they don't always work out. So, but I'll leave it at that on that one, Chairman. But yeah, thank you for answering the question there. Thank you.
Thank you very much. Any others? Can I make a comment?
Thank you, Chair. Just a very quick comment. So, as we'll all know, we've got a government budget coming in 2 days' time. Who knows where we're going to be? So everything here is a moment in time with doing our best efforts to forecast forward and predict everything from inflation through to, as we now are hearing, council tax levels. There may be some changing. So I'd just like to thank the finance teams across the council, in particular central finance team, who will not find out what our settlement, provisional settlement, is likely to be until very shortly before Christmas. and we are then 1 month later into a full scrutiny of what our budget plans are. They're going to have to work incredibly hard, and I know we're in the same position as well, so my hearts go out to them, but also my thanks go to everyone who works so incredibly hard on this area. And isn't it about time that Dorset was funded properly and given a multi-year settlement? That would be nice. That's my Christmas wish list.
I had it on my list for several years and never happened, but Santa was very cruel. So, but you never know. He might like you more than me, so you never know. Right, if you're finished with that, we will. There are recommendations. These are one, to note the SLT's forecast full year's outturn for the council, and two is to note the capital programme for 24-25. Thank you. Move to item 7, which is the Treasury Management mid-year update, which is going to be presented by David Wilkes. David.
Thank you, Chair. David Wilkes, Service Manager for Treasury and Investments. So this is a mid-year update on the Council's Treasury Management activities for the 6 months to the end of September, and it's prepared in line with the SIPFA Treasury Management Code and aims to inform members about progress against the 25-26 strategy, which was approved by full Council along with the budget in February 25. So as stated in the executive summary, all Treasury Management activity in the year to date complied with limits and parameters included in that strategy approved by full Council. And there's more detail in section 7 and 8 and also in appendix 3 in terms of the detail of that activity and that compliance. The external context, the Council's Treasury Management activities don't take place in a vacuum, and they're heavily impacted by what's happening in the wider world. In section 2 of the report, we summarise that quite briefly, but there's a lot more detail in appendices 1 and 2 behind that. The biggest external factor for us in Treasury Management is interest rates, and over the course of the year to date, we've seen the Bank of England Monetary Policy Committee reduce bank rate down from 4.5% to 4% where we are at the moment. And I think in my report I said it's widely anticipated that by the end of the financial year we will see a further 0.25% cut to 3.75%. I think at the moment markets are pricing in that cut to come sooner than that, and looking at the next meeting of the Monetary Policy Committee in December, who are, like Councillor Clifford, waiting to hear what's announced in the budget on Wednesday this week. In terms of the local context, which is in section 3 of the report, I think if I go to the table, which is section 3, table 1, which I think is page 62 in your packs, the table there summarises the kind of key numbers for Treasury Management. We're seeing that our capital financing requirement, we're expecting that to increase from just over 430 million at the end of last financial year, and we're expecting that to at year end to be about 465 million, which is just under what was set in the budget, which is 470 million. If I jump down to the external borrowing, we are from where we started at the beginning of the year, we've seen a slight dip halfway through the year. That's as we've had a number of loans that have matured in that first 6 months of the year, and where we can, we don't necessarily go out and refinance those loans straight away. We try to take a bit of a holiday, if you like, before replacing those. But we are expecting to see that external borrowing increase. Our best estimate at the moment is to 325 million at the end of the year, which is about 35 million pounds less than when the budget was set. Conversely, we're looking at internal borrowing by the end of the year going up by 30 million pounds more than what we were budgeting, and cash and investments at the end of the year to be 30 million less. So effectively what we're looking to do is take some risk off the table by reducing our cash and our investments, reducing the use of our reserves to fund cash and investments, and to offset the need to go out and take out external borrowing. Just one other thing on the cash and investments that I will highlight is that, again, the position at the beginning of the year, 63 million, you'll see quite a significant increase in the first 6 months of that, and then that drops back down over the remainder of the year. And that's a pattern that we see most years, and most authorities that are council tax levying bodies see that pattern as well. And it's largely driven by the fact that the majority of our council taxpayers still pay in 10 instalments across the year, with their last instalments in January. So effectively, the last 2 months of the year, we have a big drop in the income that comes into the council, but unfortunately not a big drop in the expenditure that's going out. And then the last thing I just wanted to touch on is in section 6, in the table 5 in there. If we can just get to it. Which is, page 65, thank you. So again, the table in there summarises the interest payable and the interest and investment income we're expecting for the year. And you can see from that table that the interest payable on our borrowing, we were budgeting just shy of £14 million, and we're now forecasting that outturn of £13 million. And in terms of the interest and investment income, we budgeted to expect £4 million in across the year, and we're still expecting that same level of income to come into the council. That's all I wanted to say, Chair, but happy to try and answer any questions that members may have. Thank you.
Thank you, David. Do you have questions? Are you comfortable with such a low figure of cash and investments at the end of that it was projected? Seems to me quite low in comparison to previous years.
The very short answer is yes. In terms of that gives us sufficient headroom in terms of being able to fund our liabilities as they fall due. So yes, I think the big fall is that when Dorset Council came together as one organisation, we inherited the balance sheets, if you like, of not only the county council but also a number of the district and borough councils, and the balance sheets of those organisations were very, very different. So the county council had a reasonably large borrowing requirement because it was responsible for funding some of those services that have the biggest kind of capital needs, so the highways, schools, etc., etc. Whereas a number of the district and borough councils had quite high cash balances. They were the body that was collecting council tax, and they'd built up investments in longer term investment vehicles rather than just having the cash on demand. And over time, we've looked to redeem and reduce those investments in so-called strategic pooled vehicles to offset the external borrowing that we've taken. So yes, we are comfortable that 30 million gives us a sufficient amount.
Thank you very much. Question from Councillor Holloway.
Thank you, Chairman. Yeah, I just wanted to ask if possible, if you can get an answer. I just want to look at sort of on page 75 and 76 of the report, where it talks obviously about the gilt yields and particularly the projection that the markets are predicting in the next sort of 2 to 3 years of it increasing from 4.5 to 5.5, and obviously that is being driven, as it states in the report, obviously around concerns about the UK and obviously the United States fiscal credibility and the anxiety that is being, especially around the bonds at the moment. So more of my question is that have we looked at try and put in protections for us as a council to help try and weather those those increases in those gilt yields, because there's been a lot of anxiety, as you know, Chairman, around the bond markets lately, certainly in the UK and in the world. So I just wanted to ask, have we sort of looked at trying to put protections in to try and help us weather those storms better, particularly when spikes do happen? Thank you.
Yeah, I think you'll find they're called elections. David, did you want to make a comment?
Thank you for the question. We do try to protect ourselves and try to mitigate against that risk. For example, in terms of the borrowing, we have, as part of the strategy that gets agreed by the full council each year, we have limits in terms of the maturities and of our borrowing, so that we try to protect against too much borrowing maturing at the same time, which kind of protects us from that refinancing risk that you've talked about there. So that's probably the main protection that we have against the risk that you highlight.
Thank you. No more questions. So there is a recommendation is the committee note and comment upon the report and to offer any suggestions for improvements in Treasury management arrangements for future. Okay, we'll move to item 8 is the interim, 260/24/25 audit findings report and letter of representation, Dorset Council, and that's going to be by Julie Maskey.
Thank you, Mr. Chairman. Good evening, councillors. So this is the first of 3 reports from Grant Thornton this evening. So this one specifically covers the key messages from the audit work that we've conducted on the main council financial statements. There's a separate report straight after this one that covers specifically the elements of the pension fund. I will take the report as read, but just to draw out a couple of key messages from the report. You'll see in terms of the key headlines from page 94 of your papers, there's been a considerable amount of audit work that's been conducted on the 24-25 financial statements since we started the work in July. Certainly I would like to put on record my thanks to the finance officers within the team. They have worked very well and supported the audits throughout the process up to the current day. And given that last year was our first year of audit, we raised a number of recommendations arising from that first year of audit. Clearly, as you can see from the action plan in the latter part of the report, officers have really taken on board those findings from the previous year and are working to address those. So thank you very much for that. There is a couple of areas of work that are still ongoing at the moment. So the report that you have in front of you reflects the current position. You'll see on page 94 where those areas of work are ongoing, although those have indeed moved on since the time that this report was published for papers. So I'd say that the main areas are where there's work still ongoing, particularly relate to work around the valuation of land and buildings. The council changed valuer during the audit year that we are looking at currently. So there's been quite a number of changes and movements in valuation compared to the values that were carried in the balance sheet last year. So we have to have a look in some detail in terms of those changes and assumptions, and had to make a number of inquiries with the council valuers. Now, we are coming to the conclusion of those inquiries, but there has been a significant amount of work given the size of some of the changes that have happened in the accounts this year. Another big area I would draw out is around IFRS 16. So that's quite a significant change in accounting standards for all local government bodies this year. This is around the accounting for leases held by the council, where effectively it brings a number of leases onto the balance sheet for the first time for local authorities, which tries to reflect the rights that the council have to use the asset, not necessarily the kind of legal form of owning those leased assets. It particularly also impacts the council's PFI schemes, where there's some very specific transitional disclosures that are impacting what needs to go into the accounts this year. So that has required some specialist work through our PFI specialists to support the work on that. But overall, I think the progress has been very good. We will also as well need to consider, before we conclude the audit, the final outcomes in relation to assessing the impact arising from the building health and safety review. And members will recall from my update at the last committee that we have formally written to the council to ask their assessment of the impact of the financial statements to make sure that we can conclude that this is an isolated area of issues that were identified and that no other controls have been circumvented that would impact the wider financial statements of the authority. We've had acknowledgement from the council they are working through that response and expect to receive that shortly. And we're also scheduled to, with officers, meet the police on Friday this week, just to get an update in terms of the stage progress of the investigations, and particularly in terms of the scope of their inquiries insofar as how that will impact any work that we are undertaking currently in relation to Dorset Council. So happy to stop there, Chair, in terms of the overall picture, but in terms of our overall findings to date, there's only a small number of disclosure errors that have been identified within the Council's audit. There's no amendments identified that actually changes any of the financial position reported previously in the draft financial statements. Probably the very final thing to say is the actual opinion itself will be a disclaimer opinion, but it's important Council understands why such opinion will happen. For any members that were involved in the audit committee when the audit results for last year were brought to this committee, the government imposed a national statutory deadline, a statutory backstop deadline, that effectively said to all auditors that you have to complete all audit work by a certain set point each year. And if auditors are unable to gain sufficient assurance by that backstop date, they have to effectively disclaim for any balances not covered sufficiently by the audit. In 23-4, which was our first year of audit last year, your predecessor auditors did not complete sufficient audit work on the 22-23 accounts, which had an impact on the opening position of the 23-24 accounts. That has a continuing effect on the current year accounts, not least because the council values its assets on a rolling basis. It doesn't do everything all in 1 year. It does it over a 4-year valuation cycle. And so that impact of 22-23 not being audited by your predecessor auditors, that has a knock-on effect. Now, there is a transitional process that we can rebuild that assurance over a period of time, but until that has to be done on a sort of phase basis over a number of years as that prior impact starts to kind of phase out. So I just wanted to make sure that members were at least cited on that, but we will bring back a final update in terms of the findings from the audit at the next meeting. I'll pause there, Chair. Thank you.
Thank you very much. Questions? But obviously the backstop date is 27th of February, 26, you're working towards, but you appear to me, unless I've got this wrong, you will sort of qualify those accounts with the fact that the 23-24 was, if you like, an incomplete audit, so it will affect 24-25, and also your interaction with the police on Friday, which I understand is it's not the council as a whole, but that it's more external. And also, in a minute, you will have report from item 12, which will go into the work that's being done. So do you think that you will obviously you have to, but you will be able to give a report by the 27th February 26? You're happy with that? I don't like the next two dates, do you? Because they get shorter and shorter. So it should be quite a challenge, actually, isn't it, to adhere? Because by the time we get to 27 accounts, you only have to the end of November. So that's going to be interesting at most, I think. Anybody else wish to comment? If not, the recommendations are for noting, and I'll move on and thank you. But the next one will be you anyway, won't it? So I'll hand back to you.
Yes, thanks very much, Chair. So same sort of format as that for the council, but this is specifically for Dorset Pension Fund. Whilst it's a separate audit with a separate audit opinion, the two sets of accounts effectively come together as one combined document when it will come back to this committee for approval in the new year. I have online with me Chris Avientes, who's my audit manager for the pension fund, and both the council team and the pension fund audit team all work together in parallel in conducting that work. And again, a very similar sort of kind of picture in terms of the results for the audit. We are substantially complete in terms of where we are with the audit. There were some areas, items outstanding highlighted in the report when the papers went out, but those have progressed since, even further since that paper was issued. In terms of findings, we've not identified any adjustments impacting the results of the fund. One of the items you'll see in the unadjusted items that is reported in the appendix to this report just reflects timing differences. They're not what I would consider genuine errors of management. So what you have to appreciate is that your officers have to put together a set of accounts very early after the year-end date, and particularly in the context of a pension fund where you're having to determine a valuation for investments. A lot of that is dependent on third-party information that's provided by the pension fund's investment managers and other parties like the fund custodian to help inform the valuation and the basis that goes into the accounts. At the time they put the accounts together, not all the year-end information is available, so they have to put together a best estimate, which may, in a lot of cases, be based on, say, a December quarter-end position with any sort of known activity that's happened that they're aware of in the final quarter. We're very fortunate when we come along to do the audit, we've got the year-end information available that may not have been available to office at the time. So you will see reference in the adjustments section of the report to some unadjusted differences, but that just reflects what has happened to that value of those investments in that time period between officers putting together their best estimate and us coming along to do the audit. So if it was material in value, we would be asking the fund to adjust for it, but recognising the values and what has changed in that intervening period is not significant. We're not minded to ask management to adjust, and that will just be reported on in the final letter of representation. You will also see that there are a number of disclosure updates that we've asked to be made to the pension fund accounts, and those are all contained within the appendix to the report. And similarly with the council, in terms of that disclaimer position, it's a very similar position with the pension fund. So not impacted quite as much as far as the pension fund side of things is concerned, but with the absence of that 22-23 audit by your predecessor auditors, we have been able to do detailed work on the 23-24 accounts, which in the context of the pension fund is helpful because it confirms all the opening balances position for the fund for this year. But there is still some elements that are impacted by that 22-23 disclaimer, in that it impacts the comparative figures in the fund account in terms of what's happened in the movements between 1st of April 23 and 1st of April 24. So it's the comparative fund account figures that are effectively impacting the accounts that we look at. So you will see some reference to that in the context of our opinion this year, that we will have to make modification for that. I'll just ask Chris to very briefly come in and just to summarise where we are in terms of the outstanding areas, and just update the committee on any additional changes that have happened since this report has been issued. Thank you.
Thank you, Julie, and good evening, everyone. So Julie has given an overview of the contents of our report, so I wanted to give further updates from what has been completed following the time that we have drafted this report. So on page 7 of our report, or 169 of the report back, highlights the outstanding areas. So I'm pleased to confirm that, subject to final review, we have now completed the review evaluation basis of level 2 and 3 investment, as well as completed the benefits payables testing. However, we are still awaiting responses to the 2 remaining journal inquiries, and also the draft pension fund annual report, which we are required to give a separate opinion. A number of adjustments have been agreed with management subsequent to this report. So on page 36 of our report, or 198 of a report back, we are pleased to report that the disclosure changes in relation to note 17 has now been amended by management in the updated accounts. This adjustment, including Note 18 adjustments detailed in the next item, also resulted to a material adjustment in comparative figures, which meant that this will be indicated as a prior period restatement contained within this disclosure notes. Further to subsequent changes, management is currently in the process of updating Note 5 assumptions made about the future and major sources of uncertainty, as the material investment value has been omitted to disclose the estimation uncertainty. We also wanted to highlight a couple of errors not adjusted by management on the grounds of immateriality. So Julie kindly covered the one in relation to the primary financial statements. And then in terms of disclosure areas, this is detailed from pages 34 to 36 of our report, or pages 196 to 198 of report back. And we have indicated on the last column whether the disclosure error findings are updated or not in the updated accounts. In terms of like the additional findings that we have on the primary financial statements, we have identified an additional misclassification error in the net asset statement amounting to 5.2 million. This is in relation to the distinction between the cash used in day-to-day operations and cash used as part of investment asset. As per the code, the cash that is used for day-to-day operation should be disclosed as part of current assets. Currently, this is part of the investment asset. And due to the amount being below materiality, this has been noted by management, and they're satisfied to not update the accounts for that, and this will be reported as part of an adjusted misstatement. This will be considered in the future periods as per discussion with management. Other unadjusted errors falling above our triviality threshold will be reported in the final AFR, which we will issue upon the completion of our work. This provides the high-level summary of update from what you have seen in the report, and happy to take questions if there's any. Thank you.
Thank you very much. I think the Chamber is very echoey for that particular report. But about you, I find it a bit difficult to get all of the words. I do have a question, if you don't mind. Just in part of your action plan, one of the things that comes out, which is sort of reminiscent of the overall problem within the organisation that goes back to the health and safety, is that people can journal £50,000 and below, not without any permission, it says. And that's to do with SAP, and that's been highlighted as an audit action. And that seems to me no different than the issues we had where people could move funds around without permission. And that's going to be stopped, or what action? I can't quite see what it's going to say, but does SAP not actually allow that to happen, or can you change it? Someone know? John?
So it's flagged in the paper that the functionality within SAP doesn't allow this to happen. But I recognise, as this committee's identified before, that the thresholds need to be reviewed. So I can take that away as an action to review the thresholds and also look at an off-system approval process. So, for example, it's not uncommon in some organisations where you would perhaps email the journal to a colleague and then they would reply back authorising it to be entered into the system, for example. So even if the system may not be able to do it, we can have a look at some options to tie us over until we get to the new ERP system to provide that governance.
Okay, can we bring that back to the next meeting then? And it will be under our new regime. You can give us a response of how that happened, because at the end of the day, £50,000 might not be much in the great context of thing, but to any individual, it's a significant sum. So I think people will be interested to know that you can move money around without authority, as I'd like to do it. Did you want to make a comment about the...
Yeah, thank you. First of all, I just wanted to come back just in terms of Chris's update, acknowledging the amount of echo in the room, and I appreciate you might have gone through that a little bit quickly. So I'm happy to do one or two things, Chair. Obviously, the full report will come back to this committee at the next meeting, so you will see the full complete list of the adjustments. But if committee would like to see advanced sight of those adjustments that Chris had talked you through at the meeting, we'd be more than happy to circulate the full list as it currently stands. So more than happy to do that, Chair. But coming back to your second point around the authorisation issue, Dorset's not on its own in some of this. We do see this as a relatively common finding within authorities. The threshold in which the approvals happen do vary quite a bit from authority to authority, but the general principle of what we're finding here is not uncommon. And our responsibility is to report to you as those charged with governance so that you are at least aware of the risk that, given the absence of authorization controls, we need to make sure we highlight that to you. As your Section 151 also has highlighted, there is more manual alternatives. Ideally, the best resort is to ensure you've got processes built in within the finance system that do that automatically, but some form of compensating control to do that review on a manual basis at least is the best alternative if you don't do that within the system.
My response was purely the fact that within your report, you've highlighted it as a weakness. You've highlighted it as further work required, and felt it was only fair that we should mention it and anticipate an answer at the subsequent meeting of how it was being dealt with. So thank you for all the answers. Anybody else have any questions on this particular item? Simon Clifford.
Chair, can I apologise to Grant Thornton for the quality of sound in this chamber? And can I ask that you and your colleagues on the committee instruct the Chief Executive, because I'm frankly fed up with going to meetings and not being able to hear things, that actually we do something so that councillors and the public can hear what is being said in this chamber?
Well, whatever he said, we'll do that. No, we will take it up. I felt that it was extremely unfair to the person giving the report. The chamber is echo. I feel it was perhaps a little brisk in the delivery, but I don't think that takes away the fact that there is very poor sound in this chamber. I think we all agree. So yes, we will definitely take it up. Thank you. Wait, that was item 9. If there's no further questions, the recommendations are there. 2.1, etc. And we'll move on again to the interim auditor's annual report. Julie, yet again.
Thank you, Chair. So we've covered the financial statements. The second principal responsibility of us as external auditors is our work as far as undertaking a value for money assessment. So we're required to provide a narrative assessment each year that looks at whether the council has adequate arrangements in place to ensure economy, efficiency and effectiveness in its use of resources. And it looks at it in terms of 3 key pillars: financial sustainability, governance, and then the 3 E's, ensuring economy, efficiency and effectiveness. In terms of the report, we do highlight there the key messages that have come out of that work, and you'll see that there's 3 different types or 3 different levels of recommendation that could arise from work that we carry out as part of our VFM assessment. The best way to remember it is the acronym SKI, which is S, which is your statutory recommendations. That's your most sort of severe of recommendations, and if a council was issued a statutory recommendation, that would need to be heard in front of full council. You have a key recommendation, so where you identify an area of weakness, you're required to identify and present a key recommendation in response to that weakness. Or the sort of 3rd tier, the lower level tier, is an improvement recommendation. So that's not saying there's any weaknesses in the arrangements, but it's given the council an opportunity to strengthen what it has and sort of improve sort of day-to-day practice. But we're not fundamentally saying there's significant weaknesses there. So you'll see from the executive summary, page 231, 232 of your papers, what we're required to do under the National Audit Office's Code of Audit Practice each year when we conduct our value for money assessment is we're required to pick up any key recommendations or significant weaknesses that were identified in the prior year's VFM audit, and we're formally required to follow those up each year. We don't have to do that for improvement recommendations, but for key or certainly statutory recommendations, we're required to do that. And in 23.4, the assessment we gave the council last year in our first year's audit, we identified 2 significant weaknesses last year. One was in relation to the funding position in relation to and the outturn position in relation to the dedicated schools grant, And the second area was specifically in relation to some of the emerging findings that were starting to come through in relation to the building health safety issue this time last year. Well, it was sort of February time when we actually reported last year's report, where some of the investigative work was in the midst of happening at that point. So we were aware there were some fundamental issues that need to be addressed, but obviously at that point the detailed reports hadn't been finalised at that point. So roll that forward to 24-25, we followed up that work this year. So the DSG significant weakness from the previous year, we have retained that this year, and particularly if you look at the position in terms of DSG, the in-year position has deteriorated quite significantly in terms of the in-year position for the council, and indeed where the projection is going is showing that sort of continued sort of challenging trajectory. That's not to say there aren't other authorities. We know this is a national issue, but certainly the scale of change and how big that overspend has increased within the current period was clearly a cause for concern for us. So we have retained that significant weakness. And then the previous year's weakness in relation to the investigation, that has been broken into two key recommendations this year. One specifically in terms of the failures that were identified in terms of the governance aspects, in terms of lack of budgetary control, lack of sort of governance and oversight, and then the procurement aspects fall under the 3 E's part of our value for money assessment. And so that you'll see that there's a key recommendation that has been reported within the 3 E's section of our VFM findings. So hopefully the overall conclusion's not a surprise to committee, because much of this has already been discussed at previous meetings. It is important, just picking up on some of the discussion right at the beginning of this meeting, this is a backward-looking assessment. It's looking at the arrangements that were in place for the 24-25 period. So it only covers up to the end of March period that we're looking back over. So we do recognise that management have already started to put in place actions to address a number of the areas that is referred to in this report. We will pick up the progress in terms of those actions and how the council has implemented and addressed some of those findings as part of our 25-26 assessment. So we will come back and revisit these again next year. That's probably the overall findings, Chair, from the report, but happy to pause there and take any specific questions. Thank you.
Thank you very much, Mr. Roach.
Thank you very much, Mr. Chairman. Simon Roach, co-opted member. Thank you very much for that summary, which appears a very diplomatic summary of the situation. If I can just mirror back what I read in that report, what I looked at and saw in that report, when we look at value for money assessment of arrangements for 23, 24, 24, 25, financial sustainability, red. Governance, red. Improving economy, efficiency and effectiveness, red. When we look at the follow-up to 23, 24 recommendations, two of the key recommendations, no progress, one with limited progress. When we look at improvement recommendations, 6 are outstanding, 1 limited progress, although 4 have been completed. So looking at those headlines, it seems to me that that's a damning indictment of value for money as an assessment for the last 2 years that has been covered here. And I think, as we've discussed previously, about making sure that we have in train the right processes and controls and governance, etc. I just want to link it to item 12. I know we haven't got to item 12 yet, but one of the key things, I think, is about the cultural and attitudinal approach in the organisation to value for money. Not about the provision of services or the quality of services, but the value for money we get from that activity. You've heard me comment many, many times about the ability of the organisation to manage to budget. And we see, again, in children's services, for example, that the unit cost is going up for the cost of those provisions, just an example. So I do think if we haven't got very specific actions around cultural change in the organisation to focus on value for money. And I don't see that in item 12. I see systems changes, process changes, organisational responsibility changes, but I don't see anything about culture. I think if we don't have something there, then that's a massive omission, and we need to address that. Thank you.
Anybody like to make a comment, or shall we can discuss this at greater length under item 12, because the point is well made. Does anybody wish to make a comment? Sean, do you want to make a comment now?
Yes, please. So I feel obliged just to make a brief comment, and as you say, can probably pick up the cultural learning piece at the item 12 later on. I just want to restate, I suppose, what was set out by Grant Thornton around that this is a backward-looking opinion. This is the opinion effectively as at the 31st of March this year, so kind of over 8 months ago. The paper later on the agenda shows, again, I appreciate the actions listed in the item 12 don't include all the organisational learning activity, but they set out that the actions that have been identified have been addressed. The starting point, again, we've discussed this a bit, the starting point is systems closing down the ability for officers to act in a particular way, and then once the systems and processes have been changed, then going through that training and learning process. So I just wouldn't want members to be left with the idea that this was something which was identified and has been left rumbling for 2 years. The timing of us finding out was kind of late 2024, so there was limited ability within the 23-24 financial year to close something out, given the length of time it took to do the investigation. And then that therefore meant the 24-25 audit opinion is kind of, it carries over in that the changes that are being described in item 12 weren't in place by the 31st of March, given the timing. So that red opinion continues partly due to the timing, and then obviously partly due to how long it has. The question and the statement from the member of the public at the start of the committee set out the time it takes to kind of turn an oil tanker like the organisation we are in to close out those system weaknesses, to do that training, to bring the hearts and minds along. So I don't wish to diminish the findings or suggest that we're not taking it seriously, but I would just like it reflected that the timing of this report is significantly not out of date, but eight months it's taken to come this way. So I do hope that when we go through this same process next year, and we'll be able to demonstrate that process in much more detail, that progress, and look to mitigate a number of those actions where possible, and taking them in the three key reds in turn. The DSG position is a national one, so assuming the government do identify a solution to the reform, and that is announced in early 2026, we would be hopeful that that will remove an element of the risk in terms of that cumulative DSG position and the deficit going forwards. And then in terms of the next two, principally related to the building health and safety work, again, the work that we've done since the 31st of March, i.e. the date this opinion was taken, has been to shut down as much of that as possible. So that there may still be an element which is picked up in 25-26 by the nature of things such as the scheme of delegation were approved at full council recently, so are being implemented this financial year. So again, there will be an element of carryover because of the, I suppose, not the bad luck of the timing of the financial years, but just the fact that these things have managed to span multiple financial years. But we will absolutely be hoping to see that those reds start to become ambers and start to become greens in the way that was set out, that the assurance following the backstop, these aren't assurances which you're going to get overnight in terms of the disclaimed opinion, but we can evidence that increasing assurance, that increased public trust in the accounts that we're producing and the work that's going on. So just wanted to add that in, so hopefully it shows there is progress, officers are taking it seriously, and we do hope over time you will start to see the more current reports demonstrating that progress.
Yes, thank you very much. I'm well aware that I think we all notice that this is for 8 months ago. And I think at that point in time, the governance and certainly the improving economy, efficiency and effectiveness, I think is just fair comment, which we have subsequently taken on board. I did think that the financial sustainability seemed slightly unfair, I thought, because the council had spent some time trying to come up with a safety valve agreement with the government, and it really is a national issue. But when you know, as a local resident looking at it, I feel that it fails to really bring that into the perspective of this report, and I felt it a tad unfair, really, because it doesn't really say about the work that we've tried desperately to do to try and control this, which is an uncontrollable expense and the government nationally recognised. So I don't know if you want to make a comment.
Thank you, Chair. Just a really small comment, and we're not in any way just not trying to recognise the national position. As I say, it is a common finding we do identify. I think we put all local authorities, particularly where you have challenges in DSG, through a central moderation process to make sure that we are benchmarking how councils are performing. And in a lot of cases, it comes down to not necessarily the size of the overspend. It's about, we recognise that a lot of this is government controlled, and the impact of the lack of financial support in the past has obviously exacerbated the problem somewhat in some authorities more than others. But the funding side of things is only one part of the story. It's about looking at how the council is doing what it can to contain and manage the extent of that overspending year as much as it possibly can. Now, some of that is demand driven, some of that is cost driven, some of that is lack of funding, and it's just making sure that it's all of those component parts are being worked through by the council effectively. We just felt, because of the scale of the increase, when we look across and benchmark different authorities, the scale of the increase at Dorset, comparably looking at some of our other authorities, is considerably higher in a lot of cases to some of our other benchmarking data. So that's where the moderation, it's a fine balance in terms of judgments, but that's where the moderation conclusions were reached in this particular case.
Thank you. I hear what you're saying. Right. So if no one has any other questions, there's just the recommendations in 2.1, 2.11, and we would move to item 11, which is not Julie Lasky. Item 11, revised terms of reference for Dorchester Market's informal joint panel, and Graham Duggan is going to present the report. Thank you.
Thank you, Chair. Good evening. Can I firstly make an amendment to the report? This is for approval and recommendation to full council. So with that said, Dorchester Markets have operated under a Royal Charter since 1630. The governance arrangements are comprised of a market panel made up from representatives from Dorchester Town Council and Dorset Council. The market has been operated for the past 25 years under a contract with a third party. That arrangement comes to an end next April. The parties have agreed that from next April, Dorchester Town Council will manage the markets in Dorchester directly. And for that to happen, we need to make some relatively minor amendments to the terms of reference for the markets panel. Those terms of reference are attached to this report, and I'm seeking approval and recommendation to full council. Thank you.
Thank you very much. Do you have any questions? Jill.
Councillor Jill Haynes, Chalk Valleys. No, only to say this has been a very, very long time in process to get to this stage, and I thoroughly approve that we finally got there.
Thank you. Anybody else? Now, this is a vote. You need to vote. So I need a proposer and a seconder.
Proposed, Chair.
Seconded by Councillor Haynes. Those in favour? Thank you very much. So we move to item 12, which is the update on the response to the swap investigation and compliance audit. We eagerly await. And Sam, it's over to you.
Thank you very much, Chair. Good evening, committee. Hopefully you can hear me okay. So I'm Sam Crowe, Director of Public Health and Prevention, and I'll be introducing this report tonight. That's partly because during the summer, When the audit report and the investigation reports became public, I was interim chief executive at the time, and I agreed to lead on how Dorset Council responds to the issues that were raised. Since that time, although I've stepped back into my public health role, I have agreed to continue to be the senior responsible officer in the senior leadership team leading this work, hence why I'm presenting tonight. So I'm pleased to be able to report to committee that the report you have before you shows that I think we have made substantial progress in completing the most important actions identified by internal audit that, as you know, pose serious gaps and weaknesses in our controls. There were essentially two significant reports that we were considering as part of our response: the audit by SWAP of contract and expenditure compliance with the Council's scheme of delegation, and a more detailed investigation which was commissioned from SWAP into exactly what happened during the period that the health and safety compliance work was being carried out. In June this year, committee agreed to an officer working group overseen by a cross-party members group to oversee the initial work responding to the actions set out in the SWAP audit. And then in July, committee held a workshop to consider the investigation findings which recommended the development of a consolidated plan. And this was to include wider organisational learning. Following that recommendation, I've been leading an officer group in Dorset Council to construct that plan, and it may be helpful if I show a slide in a minute that sets out exactly where we are in the process. It has been quite complex work. We went quite wide and deep initially to collect all of the potential actions, and we've been following a sort of fairly rigorous process to make sure that the wording, the priority and duplicate actions have been removed as far as possible. So if you bear with me a second, I'm just going to share my screen. So hopefully that'll go on slideshow. So what you see before you is a graphic that I found quite helpful in understanding exactly where we're at in the progress that we're making. Right back in December 2024, there were two urgent technical actions recommended as a priority to stop the ability for people to impersonate within the system and breach the delegation limits. They were completed. In July 25, we had 4 initial governance actions. That was the point at which I began the conversation with the senior leadership team. SLT agreed the response and the approach to the audit investigation findings, and that was the point at which we started to bring together a group to build that consolidated plan. In September, I believe that was the first time committee started to see progress with the response to the initial audit actions. There were 16 audit actions in total, and 14 of those are complete. All of the priority actions have been completed, but there are still 2 issues that haven't been completed due to ongoing issues. And then we're moving into October with how we land the investigation actions. I had hoped to include those as part of the report tonight, but when we started to go into the detail behind them, there was a lot of duplication. The wording was wording that had come from SWAP, and it hadn't been agreed with senior responsible officers. So we've gone through a process where Kerry Brown from SWAP has met with all of the senior responsible officers. Those investigation actions have now been validated, and they'll come back in with a proper audit plan number. So SWAP usually issue their audit actions with an AP number, and that will enable committee to continue to track the progress against those investigation actions. And then finally, on the right hand of the slide, which I think is possibly the most important part of the plan, and I note Mr. Roach's comments under agenda item 10, I completely agree that there needs to be sustained effort on those leadership behaviours, the visible compliance, the consequences, which is much, much longer term work, and we need not to gloss over that. So in a week's time, I've got a workshop with the organisational learning group. We're going to go back and review all of those actions, pull out the themes that were identified in the summer from the workshop, compare them with the learning that's coming out of the specific technical actions, and we will prepare those to be picked up by that organisational learning plan, and happy to continue to report that through committee. So I know it might feel like it's been slow progress, but I felt due to the complexity, it was important to walk through this stage by stage and to be absolutely clear on where we are in the process with committee. I'm just going to stop sharing the slide. So, just moving on then, I've commented on the importance of the wider organisational learning. One of the issues that I think is going to be really important from that workshop is a proper understanding of how we would measure and evaluate progress, particularly with culture change. We can report on technical actions, but what I want to see coming out of that workshop is a proper plan for how we start to continue to take the temperature of the organisation and look for signs that real change is happening and that we are changing the culture. I guess the final issue I want to mention tonight before moving to the recommendations is just to remember that this whole episode was sparked by urgency in relation to the need to carry out urgent work to improve the building safety compliance. The paper notes that there is a planned internal audit underway by SWAP on the Property and Assets Improvement Plan. I hope that will provide an assurance opinion on the steps being taken to improve the management of the service. I'd also propose that the committee should consider receiving an officer report on the safety status of the council buildings. And in that way, it closes the loop to how this whole episode began. So it's important not to forget that that was how this whole issue started in the first place. And then finally, to note the recommendations, I'd like committee to note the progress that's been made with developing the plan and the progress in particular on completing the priority actions, in particular those from the audit. I'd also like committee to support the proposed governance and member oversight for the continued work. The progress on actions from the audit and investigation, I think, should continue to come through this committee, and we'll be able to track progress given those AP numbers that are now embedded in the plan. But the wider learning, I think, should report also into the member-led transformation steering group, and that's because of the learning that will be helpful as we start to implement some of the transformation and change, not least migrating to new systems such as the enterprise resource planning system, which should in itself improve our grip on information processes and ensure compliant spend. But if we don't continue to track the culture and behaviour change required through the organisation, then we'll miss that trick of being able to create that really powerful, sustained moment for change and not just have it as a series of technical actions, if that makes sense. Finally, I'd like to thank the officer working group that first started the work in response to the SWAP audit. I think they've done a good piece of work in making sure that we've closed down most of those actions. I'd also like to thank people who've contributed to the organisational learning group. We really need to keep the energy quite high in that group as we move into the wider organisational learning actions. There's a huge amount of focus going into this work, not least supported by a new chief executive who's already giving a different message, I feel, about the importance of value, getting a grip, really understanding our budgets and really understanding the value that we derive from that spend. But I would close by saying we are well aware that there's still much more to do in embedding that wider learning, so we're not going to take our foot off the gas just yet. It's vital that we do regain trust through this work, and I hope that the report tonight goes some way towards that, but I do recognise there's more to do. Happy to take comments and questions from members. Thank you.
Well, firstly, Sam, I'd like to thank you for the amount of work you've done on this, and it's a really good report. Move to questions. Spencer.
Thank you very much, Chairman. Spencer Flower, Verwood Ward. Yeah, I've read the report, gone back over some of it more than once because of the complexities complexities that are in the process, and the failures we've been talking about are process failures as much as anything else. And I think process mapping ought to become part of how you display the way we go about it through all the gateways and so on of approvals and such. And I think that ought to be taken as an addition to what's been done in the Word. I think you need to put illustrate. You did it just now. You illustrated where you are to where you want to be. And I think we should have something that enables not only members, but the public and also the internal auditors to understand where the critical aspects of that processing lies. And although you commented about SWAP getting involved in the work around health and safety, and clearly that's necessary, I'm pretty sure they'll be looking at process compliance as well, and the priorities linked around that, as well as the actual works that we talked about earlier about the health and safety stuff. So I think a lot of good work's been done. It needed to be done. I think we've clearly got our head around a lot of the issues that we're faced with, but I think we're not quite there. I think we need to do a little bit more work, and I commend the work we've done with Simon Clifford been chairing a small working group of members overlooking the way in which we've gone about this. And I think what with that and the officer working group as well, I think a lot of good progress has been made. We're not going to pat ourselves on the back because we shouldn't have been where we were, but we are, and we're dealing with it, we're recognising it, and I'm happy to support the recommendations as set out in the report, but I would ask that we take on board my comment about process mapping. Thank you, Chairman.
Thank you, Mr. Chairman. Simon Roach, Co-operative member. Just to comment, really, I'm really encouraged by what I hear. Thank you for the update, and very encouraged by the organisational learning activity that you're planning on kicking off. So I have a somewhat limited lens into the organisation from a couple of perspectives, one as a resident, one as a member of this committee, and I certainly have no doubt from the conversations we've had that there is a very clear focus on providing quality services to the residents of Dorset Council. That comes across, time after time. What I'm not so convinced about is the value for money bit, which is also an important element. So the fact that that organisational learning, the culture, the sort of hearts and minds piece of work is going ahead, I think is really important. And the tone that you suggest is being set by the new chief exec is also very encouraging. So thank you very much for the update, and I look forward to hearing the progress on that.
Yeah, I think it's incredibly interesting. I think that turning off the money tap is really easy, and putting in controls, that's not really the problem. But I would expect them to do that anyway because of this. But I think when you come back to the value for money, you have to remember that for a long period of time, people were happy to spend £300 when they could have spent 20. And all around them, people were watching this taking place. And it ends up with a whistleblower having to stop it. So the actual culture, if you like, is to blame, in my opinion, as opposed to someone who managed to get around a system. It's the culture that enabled no one to do anything about it. And it just went on and on. And so I think the work that's being done now, I think, is the most important work. I'm not really interested in the fact that you've turned off computer systems so they can't get access, because I would expect you to do that, as I said, anyway. But this cultural piece, I think, is what we need to monitor throughout 26 and the work that you're doing. And that's how I see it. So I hope that you will agree, and I hope you will agree with my statement in answer to a question, actually, from a member of the public, is that we will continue to monitor the SWAP investigation actions, and we will bring it back to the meetings throughout 2026 to monitor how you feel that the culture is changing and how that it's impacting overall. So look forward to it. It's an interesting period ahead. I hope that it works. Thank you. Belinda?
Thanks, Chairman. Can I just be assured that as part of the work on the sort of organisational learning and the culture, that relationships with members are included? Because I think one of the things that I was finding really frustrating, and other members of the committee, was that we were raising concerns about kind of wider aspects of that enabled what happened to happen, and we were not being listened to. So, and there was a meeting earlier today where something that was sticky in discussion was also, I feel, about members not feeling that they are being listened to in the way that we feel that we are elected to do.
I understand, and we've had some email exchanges about this earlier in the year as well. So I think, Simon, did you want to make a comment?
Yeah, thanks, Chair. Just hopefully a bit of reassurance, as Councillor Flowers already intimated, that there is a cross-party members group overseeing the work that's going on, and it is a huge amount of work that's going on. And if I come back to Simon Roach's comments from earlier and now, everyone knows that culture eats strategies for breakfast. So we can have all these plans, but culture change is really hard. And that will take time and it will be embedded. I'm very encouraged that Sam's already intimated that he's going to look at indicators to show that culture is changing. And we have the advantage, of course, with a new chief exec and actually a senior leadership team who largely are pretty new, that culture change is something that must be accepted and driven right through the organisation. It's got to be more than just nice coloured greens on a table. It has to be something that you can demonstrate all the way through the organisation that it has changed. Because it came as a huge shock to us that this council had these failings. And actually, the biggest shock is the fact it came as a shock because we didn't know to look for it. Now we know to look for it and we know what good will look like. Let's get there and work together cross-party to get the changes that we need.
Thank you for those comments. Do you have any other comments? So once again, Sam, do you want to come back on something?
Yeah, just to provide assurance that that action in the wider organisational learning is definitely there on responding to members' concerns. Also in the paper, you may or may not have picked up that there's a piece of work about to start with the Centre for Governance and Scrutiny, which will be about how officers and members work together to make the best decisions in the interests of residents.
Thank you very much. Once again, this is for noting. I think this had a very good outing. At 2.3, approve proposed governance. Don't think that's a voting, is it, John? You are all happy with that, I assume, and no dissenters? Okay, that's fine then. So we will move on to item 13, which is the update on our future council work. Once again, thanks, Sam, for that.
Thank you very much, Chair. Lisa Cotton, Corporate Director for Transformation, Customer and Cultural Services. Very pleased tonight to present an update on our future council governance as we continue to deliver our transformation and report progress from planning now into delivery and from incremental change into a far more joined up transformation plan. We have included in supplementary papers a written paper that speaks to this item. So just to give you a really brief progress, what we have delivered over the last couple of months now, which have been reported through Cabinet and scrutiny in some detailed progress reports. We are now implementing our customer, business support and transformation functions as a key part of our new organisational design and operating model. And also we are unifying and bringing together all of our change and transformation as one council. And we have spoken about that in committee previously. So part of those new ways of working are where we have brought our transformation activity together under a single one council model. And this ensures that our change in future is really strategically coordinated and we ensure that we have the resources and the delivery plans that enable us to do that. And that is absolutely supported by our governance structures. And we have been, with support from members, strengthening those governance structures. And also from the arrival of our new Chief Executive, Catherine Howe, also looking at how we strengthen how we make decisions and about our change and transformation. So one of the new areas of governance that we have now introduced is our design authority, and that has been established to oversee that change and those decisions so that we're really thinking back to that organisational design and also our technical design so that we make the right technology choices and the right changes that align to our strategic priorities. Our One Council Transformation Management Office, our Transformation Office, launches next week. So that's one of the first areas of the operating model that we have delivered. And that will really provide that central point for planning and managing change and embedding that organisational learning. So as Sam was speaking there to that report, really thinking then against all of our council plans and all of our transformation plans, how we're embedding that learning as we deliver. Throughout this period of delivery, we have really been listening to our workforce and listening to the risk that has been presented against any change that we're delivering. And what we have learned is that introducing technology before doing that redesign and before bringing those teams together really needed to be thought through. And so making sure that we introduce that now enables our teams in the future to have a smoother and safer delivery and transfer into that new system and into those new ways of working. So as you're hearing from the rest of those reports, we have some significant technology changes that committee are aware of, especially that finance, HR, payroll, those new enterprise resource planning systems, and we really need to make sure that we are introducing those in the right way with our workforce and really embedding those new ways of working so that we're implementing those safely and we're making sure that we're able to continue to deliver our services alongside. So we're really thinking about this in a design and safe, risk-based way. Investment has now been secured, so we are returning to Cabinet on a 6-monthly basis to look at the investment required and make sure that we're making progress against those delivery plans. So there will be that far more frequent now coming through with what are our investment requirements and our delivery that will be able to be reported. What benefits are we delivering? How are we delivering better outcomes? Really making sure that we have that robust way to look at our financial and investment controls and also really speaking to those positive benefits that we'll be looking at. So investment will be released in stages and that spend will be tightly controlled and as will the accountability over delivering our savings and those outcomes. So this has meant overall, and as you have seen, that we are taking a slower, more deliberate approach to delivering those changes. And as we understand, our services are often competing against that rising demand for service, which makes us absolutely more cautious around workforce reductions. So we have to make sure that we are maintaining that operational resilience whilst delivering financial savings and better ways of working for those outcomes. So in summary, we have strengthened our governance and oversight. So we now have that multi-layered and agile oversight with regular oversight from our member steering group on a monthly basis, 6 monthly with Cabinet, audit and governance here at committee, and also regular oversight from our scrutiny committee. So moving forward, those 6 monthly investment and delivery reviews will continue through Cabinet. We have a monthly agenda item here at Audit and Governance, and our longer-term technology changes will have significant, robust governance put around them so that we can make sure that we're bringing that to you as well, so that you can see the progress and delivery against those digital and enterprise resource planning initiatives. So structural changes will now continue to be sequenced after those technology rollouts, and we'll be looking at how we deliver that approach to minimise risk. That is a summary of the report today, committee. I'm happy to take questions. Thank you.
Jill, do you want to ask?
Thank you, Councillor Jill Haynes, Chalk Valleys. A few things I welcome and a few things I would like more information. So firstly, really welcome to have a proper written report come to this committee. That's very helpful. That's what we've got here. I also really welcome the fact we now have about to start a transformation management office, and that the new chief executive is looking to push through that office the changes right across the council, and this to be a much bigger programme of work than it was in the first place, as from what it started. So I welcome that. What I'm not so happy about is the way at 3.3 the governance is sort of put out with a programme board and a design authority and a it doesn't tell the public who's involved in what. And so the programme board, it says senior leadership. Is that the leader of the council or is that the chief executive? The design authority, who's involved in that? Well, certainly aren't any councillors, as far as I'm aware, involved in that. So my next challenge is, how are we showing that this is member-led? Because what you've got written here doesn't look very member-led. It looks like officers moving forward with a bit of change to the council so that we can keep in budget. And then finally, I'd really like to push, and I know I pushed this at the last, because I am on the transformation steering group. I'd really like to push how transformation is making savings, and that if we could have this as a regular report, can we show in here we've done X and that is going to produce Y by a certain date? That would be really, really helpful. Thank you.
Do you want to respond at all or just make comment?
Thank you. Really welcome comments from Councillor Haynes, and really happy to look at those governance boards, perhaps a member steering group. There are the member boards there that we are bringing into regular reporting now, which is what I provided during the actual report. So member steering group on a monthly basis should be absolutely overseeing and reviewing those decisions and those changes that are coming through. Some of those decisions that are made and those processes that go through the officer governance steering boards are process and are quite technical and looking at actually how the services will be delivered in the future, but happy to really kind of flesh out what happens in those groups and how it all feeds through. And perhaps a diagram might help as well, as we can see how things move around the organisation. So happy to work with members on that.
Thank you. Mrs. Todd.
Councillor Andy Todd, Coal Hill, Wimborne Minster East. I would very much like to see numbers put against this. We are making promises of savings as a result of this work that is forming part of the budgets for future years. It's already slipping. It's already affecting releases of contingency as a result. If officers are making promises as to what this is going to deliver, I would like us to be able to hold them to account against it. It might discourage people from possibly overinflating the numbers that they're putting forward, allow us to make better decisions. Thank you.
I believe Councillor Wilson would like to make comment.
Councillor Ben Wilson, excuse me, portfolio holder for corporate development and transformation. I'm just listening to the comments being made by the committee members. Just to sort of reassure, the purpose of this report was to cover the topic of governance as we saw was appropriate for this committee. If this committee is looking for more of a steady monthly progress update, I can assure the members that that is happening in other areas, but if we are wanting to bring that into this and have this as the councillor just suggested, some numbers, we absolutely can do that. That's not a problem. Also to reassure, I mean, we have to accept that this year there have been a lot of learnings going through this programme, and that has led to some changes, and Lisa alluded to one of the big changes, which is about how our relationship between organisational change and technology, and that is something a learning we've taken on board, and we've now adapted our plans as a result. What we're now looking towards the budget for next year, a much a much closer alignment across the council of what the transformation initiatives are, how they will deliver savings, and then importantly, how we will start to see benefits, bearing in mind that not all benefits are financial. So we need to be looking at benefits across a spectrum. What I've requested in my role, and this is new news to Lisa today, but something to reassure is a benefits milestone. So going into next year, we have line of sight on when we're expecting to see those benefits land, and that will give us a closer line of sight on how we can monitor. Again, that is something we absolutely can bring forward in the future. I think it's for this committee to clarify what exactly they want to see in the report, and we'll gladly provide that information.
Jonathan Mayer, would you like to comment?
Good evening, members. Jonathan Mayer, Director of Legal and Democratic and Monitoring Officer. Just a word about the distinct role of this committee and the distinct role of the Place and Resources Scrutiny Committee. So just as we've set out briefly in paragraph 3.3 of the report, in the penultimate bullet point and the final bullet point, this committee is looking at program risks and governance effectiveness. What I think was being asked for a moment ago is around that program delivery and effectiveness of delivery of savings. That's what happens at Place and Resources Scrutiny Committee. And you would be, I think, Chairman, trespassing on their role if you were to get into receiving those updates about performance and delivery of savings. Thank you.
Well, I'm sure we wouldn't want to step on anybody's toes, would we, chaps? No. Beryl, comment?
Thank you, Chairman. Councillor Beryl Ezard, Wareham Ward. I would like to ask, I mean, there's lots and lots of new terms and all sorts of, jargon in this paper. I would like to ask if any other councils have actually gone down this route, and is there anything that we can compare with best practice that's gone on in the country that we can actually compare with? And I'm just wondering if there's anything like that we can. I mean, we seem to be the forefront of all this AI, transformation stuff, but I'm sure we're not. So could you give us a bit more information about that, please? Thank you.
Well, I could ask ChatGPT if you'd like, but I believe that Lisa Cotton might make comments, please.
Thank you for the question, and yes, absolutely. We speak with colleagues across with other councils continuously. We're all on a very similar journey in looking for new ways of working, lots of new technology, and lots of new digital initiatives that are being presented through local authorities in order for us to be able to work in those new modern ways and work, more importantly, to what a lot of our customers expect now in their everyday lives and how they access services elsewhere. So we are part of the Local Government Association, the LGA Transformation Network, which is approximately 50 councils that contribute to that. Lots of learning, so there's lots of skills and ability for us to pick up those references from other organisations, learning from other organisations, and also training for our teams. And our digital and transformation team are very well connected in with, again, other organisations around some of those new initiatives involving artificial intelligence and automation and those new platforms. So we actually are one of the councils that talk nationally about the opportunities that artificial intelligence and automation can bring, and also what we need to do to prepare our online services so that they are far more effective in that space. So we're very well connected across a number of councils.
Thank you.
Thank you very much, Simon Roach, Cooperative member. So thank you for the update. One of the key lessons, which I think is important, perhaps for any local authority to take away when it's driving this scale of change, is that of Birmingham City Council, that implemented or tried to implement an ERP system. And one of the key issues they had was that they tried to optimize the processes, and then they tried to find a technical solution that would meet those processes. And what they ended up with is such a customized solution that it was too expensive to create and therefore maintain. So I'm interested that you say that you've had a learning around looking at the relationship between organizational redesign and implementing technology and doing those the right way around. It's implied that processes are in there, but it isn't explicitly stated. So I won't ask the question, but I will just offer my encouragement that as you're looking at processes, do it in the light of the technical solutions that you have chosen. Don't try to optimise your processes first, because that will result in a Birmingham City Council outcome. As was said earlier, if we are to focus on risk at this committee, it would be helpful if the paper is actually focused on risk. I mean, it's a general update, which is helpful, that's useful, but actually, in terms of focusing on risk, I think it's missing something in terms of the key risks and and how they're progressing and what new ones are emerging and et cetera, et cetera. So a refocusing on that, if that's the role of this committee, would be really helpful. Thank you.
Yes, thank you very much. I think I was going to mention within the report there's some very high risk changes, particularly if you're going to start changing payroll, etc. These are IT nightmares, or could be, and I think we need to perhaps look at those as the year progresses. In particular, if you get payroll wrong, it's going to be it's a potential disaster. So I think we need a bit of reassurance from a risk point of view of where that's going, how it's going to work, and when you're going to do it. So I think that's something that it should come out of a report. So more of an emphasis on IT risk, I think, in particular, and we should look at that in the new year. Councillor Wilson.
Thank you, Ben Wilson, Corporate Development and Transformation. Just to respond to the question around the implementation and the design, and the risks that were highlighted at Birmingham City Council, and actually relates to what Councillor Flower said earlier. We will be designing the future processes, but we are adopting what we call a fit to standard approach. So, as you know, we've opted for an Oracle solution that will come with certain functionality. The other IT speak is you configure, but you don't customize. So we're very much focused as we progress that we're making sure that everyone understands it's minimal customization. Part of it is because these technologies are now in the cloud, there's actually more limits to what you can customize. So hopefully that sort of puts a bit of a dampener on those efforts, but we're very much focused on ensuring we don't go down that road.
Thank you very much. Does anybody have any more comments or questions? No. Okay. Thank you very much. The next item is the work programme. Going to add into that a new standing item, John, for items that arise require answers in the subsequent meetings, and also continuation of the swap report. Anybody else like to? Is there anything else anybody wants added? Work programme at this stage? No? 15 urgent items? None. 16 exempt business? None. That brings the meeting to a close. 24 minutes past 8. Thank you very much for your time and input. Thank you.